All right, what's up, folks? Anthony here, Hawkeye Traders. Welcome to the video. I want to talk about the importance of multiple time frame volume confluence. That's right, multiple time frame volume confluence. What does that mean? We want to look at the bigger picture to see what exactly is happening, when, where, and why, right? Is it an anomaly that it's just one day we have ultra high buying or selling volume, or is it the entire week, and can it give us a bigger picture perspective of what could potentially happen next? So in this example, we are looking at NVIDIA, okay? Ticker NVDA. What you see in front of you right now is a weekly chart, meaning each rotation or each candle is 1 week's time frame, Monday through Friday. Full week, that's the entire session, represented in one single candle. So let's take a look at some of these high volume areas, particularly the selling, okay? So I'm looking at that selling bar right there, okay? And I'm also looking at this candle as well, okay? Notice super high selling volume right here, okay? And that candle, the wick of that candle provides resistance until broken on the week of January 8th. This candle was printed the week of August 21st. September, October, November, December. 4 months. The wick of this candle prevented price from going higher. Do you think that is valuable to know? Of course it is. Of course it is. So let's now go to a daily chart, meaning now each candle represents one rotation or 1 day session. That candle, that same candle, is right here, okay? It was Thursday within that week of August where that ultra high selling volume occurred. And at the top of that candle, it prevented price several times before being able to overcome it from going higher, okay? So, again, do you think that's valuable? I think it is, because if I can find an ultra high selling point at a high, my thought process is next time price revisits that area and it's unable to overtake that area, there's a better than not chance that selling is going to come in. Now, if you look at this next attempt here to overcome this high, notice the buying volume did what? Start decreasing, right? So as you come into this, you realize that the buyers are not going to be able to overcome, and you take a very efficient 17% drop. Take that to the options market, guys. I mean, we're talking about a very lucrative return, all right? Now, let's look at it again here, okay? Take another peek right here. We come back up. There's no new interest pushing us higher, right? In fact, look at this buying candle right here on this specific day, right there, and take a look down below right there at that high buying volume. Did the candle advance? No. In fact, it opened and closed at the same price on that very specific day, which was Tuesday, October 17th of 2023. Well, if all that buying came in and the candle didn't advance, never mind not make a newly appointed high, what do you think's going to happen? That's right. The market's going to fall back from there. And that's exactly what it did. Right? Guys, there is nothing on the chart other than some hand-drawn analysis. It's all about the volume and the price action. The hand-drawn analysis is simply built around the volume and price action, right? Because if we don't understand what's happening, when, where, and why, how are we supposed to put together an analysis thesis, never mind a trade plan to attack the market? So it's vividly important that we look at multiple time frame confluence, especially when it comes to volume. Look at the high of this candle right here. This is recently placed. This is a weekly chart. This is the week of March 4th, 2024. Okay? Big wick, small body, high selling volume. Increased in volume since back to when this last selling candle. Okay? So this is the next highest volume printed since this last big selling candle that we talked about just a few moments ago. So take a look. Right? Take a look. Price did what? It came back up to that high, and there was no interest to take it any higher. So what happened? Price fell back. More often than not, price is going to retest. It's going to find that there's no new presence of buyers or sellers, at whether it's at a high or a low, and it's going to fall back. Well, guess what happened? It fell back, right? Here's the retest, and there's a 18 plus 19% drop. Again, on a put option, you can make a lot of money. You can get a very large percentage return. Okay? All you have to do is be able to step back and take a look at what the market's telling you. Let's do the same thing and go to the daily time frame. Right? Again, multiple time frame analysis. I do this day trading, swing trading, position trading. Okay? You should always be looking at any angle that can give you a benefit. Right? We're looking at the same stock. We're just looking at it from a couple different time frames to put everything into perspective. All right, let's take a dive here into this extraordinarily high selling volume, right? This candle right here. We tried to push, made a new high, and then we got plummeted by sellers. Well, guess what happened when we returned back to that high on the daily time frame? Guess what? We returned back to that high on the daily time frame under descending volume, right? The volume, the buying volume was actually decreasing, which tells you what? There's an extraordinarily high probability that price is going to fall back. This is how you dial in such a low risk trade. Okay, let me explain this to you. If we enter based on the failure of this candle, on decreased buying volume, the failure to make a new high, okay? If we enter short here, what's our risk? I mean, our risk is literally just hovering over the prior high that we failed at. I mean, we're risking 3%, call it 4%, all right? Give it a little breathing room. Call it 4%. You're risking 4%. Okay? Right here is the recent low. I'm looking at this right here prior to that high being made, okay? I always target the lows first, okay? Because chances are buying's going to step back in, and I'll show you exactly how that happens. That's a 4% risk to a 12+% return. 3 to 1. That's not a bad starting point, right? Why do I go after the recent lows first? Well, notice over here, if I drop a line here, okay, I want you guys to see exactly how I look at price action and volume, right? This is the low I'm targeting. Notice what happened when we initially retested that low. From descending selling volume, we had a little pop in buying. Why? Very simple. More often than not, right below or right at this low is where those stop orders are resting. Okay, if you understand liquidity in the market is always going to hunt for liquidity. Liquidity is like oxygen to a fire. Market pulls back, consumes those stop orders that were resting there. Market pops back up, sets a lower high. Okay, so that's still telling us that, hey, you know, Mr. and Mrs. Trader, we should be aware that, you know, we're still moving in this direction, okay? From here, we take that next plunge into where? Well, just above, well, I should say just at these lows right here. So here's your gap and impulse. Here's your correction. This would be the next key area to be looking to take more profits at the low of this candle, right there. That's what we come into on what? Ultra high selling volume with no follow through. In fact, the next candle closes back above this level, and you can see since then, at least on a short-term basis, we're doing what? We're retracing higher. Right? If you're ever not sure what the market's doing, just take a very simple trend line, run them through the lows on the way up, run them through the highs on the way down. Now, I'm not saying that we can't place a lower high here and can't go lower. I'm also not saying that we can't continue higher from here. Okay? But we are now kind of caught back into this topping pattern. And when the opportunity to identify low risk and high probability trades are produced by volume and price action, you must be prepared to make the assessment, see if it fits your trading objective, and then be prepared to place the trade if it checks all your boxes. That's it. But foundationally, before you put any of these lines on the chart, because you won't necessarily know what you're looking to put lines around, you should be able to look at a chart like this. All that's on here is Hawkeye volume, okay? Hawkeye paint bar, Hawkeye pivots, Hawkeye volume radar, okay? This is the starter package because this is the package that you must have in order to even build this foundational understanding. In fact, this component right here is the game changer. And then you could start layering complexity if that's what you're looking for. For me, 9 times out of 10, this is everything I need. The market shows me everything I need because I am fluent in understanding the relationship between volume and price action. My goal through these videos is to help you become fluent in understanding the relationship between volume and price action. Okay? Hawkeye's tools have been a turning point in my career from a struggling trader to implementing this foundation that I was missing. Okay? Nobody taught me this stuff. They taught me how to buy this and how to buy that, and you need this and you need that, and blah, blah, blah. Okay? At the end of the day, what you need is a volume and price action. And you need an in-depth understanding of the relationship between the two. Okay? Anything else that you put on top of that, it's icing on the cake as long as it serves a vital purpose. Okay? Cluttering your chart with stuff for no reason is not a vital purpose. Okay? That is just, I don't know, decorating. Okay? I encourage you, when you trade on a chart, it should be as clean as possible. When I trade, what you see on your screen right now is what my chart looks like. And then when I'm putting together my thesis of what's happening, when, where, why, what volume's doing in relationship to price action, then I come in and I start doodling. Okay? People always make fun of me because I draw on my chart. Okay, listen, all I need is an interpretation of what's happening. Okay? And the drawing component, for me, is what makes it very easy. Because that's how I go back and I journal. Right? I build a record of the trades I place because I have on the screen exactly what I was looking at when I decided, or if I decided not to place a trade. So guys, foundationally, volume, price action, the relationship between the two of them is everything you need. These tools that I would love for you to get your hands on are going to be an absolute game changer in your trading career. Okay? Putting that whole thesis together, guys, is what's really going to take you from wherever you are to wherever it is you want to be. So if you want to learn more about the Hawkeye package that you see on your screen right now, there's some links below this video. I encourage you to click on them, consume the content, watch the webinar. I'm also going to put my concierge team phone number. I'm going to put a couple email addresses down there. If you have questions, feel free to reach out. Also, leave comments below this video. I will answer them personally. All right. If you enjoyed this video, I ask you to simply like it so that it reaches more retail traders so that I can help them along their journey. Subscribe to the channel if you haven't done so yet. And I look forward to working with each and every one of you. So I appreciate your time. God bless, guys. I hope you enjoyed it, and I will see you in the next video.